Securities offered through Cambridge Investment Research Incorporated, a broker-dealer, member FINRA, SIPC. Advisory services through Cambridge Investment Research Advisors Incorporated, a registered investment advisor. Cambridge and Clear Vista Financial are not affiliated. Discussions in this show should not be construed as specific recommendations or investment advice. Always consult with your investment professional before making important investment decisions.
Philippians 2:3 says, "Do nothing out of selfish ambition or vain conceit. Rather, in humility, value others above yourselves." Hi, I'm Certified Kingdom Advisor Mark Trice, and I want to welcome you to the Spend Life Well show, where we apply biblical wisdom to your financial journey. I'm joined in the studio today by my co-host and fellow financial professional, Jesse Hamilton.
Hey everybody, how are the listeners doing today? How are you, Mark?
I'm doing well. It's been a while since we've been able to do the show together, Jesse. You've been out traveling and doing...
I've been busy, visiting friends and enjoying some time with my wife, and just been busy lately. So yeah, it's good to be back.
So you have a wife. I have one too. I don't know where she is, but you've been really doing some cool stuff this summer. You've been doing some of your music ministry at different youth camps around the state.
Yes, I've loved traveling with the band some and getting to do ministry through music to some youth. So it's been an awesome time.
So tell our listeners the name of the band, because I have to push that out there, because I know he's got merchandise and stuff.
He does have merch, but it's called the Art Wellborn Band. If you want to look on Spotify, Art Wellborn.
Art Wellborn Band. Cool. That's awesome.
Yep.
So folks, you can call us anytime with your financial questions, day or night. We might answer the phone if it's nighttime, but we're definitely after the phone. It's daytime. But you can call us, and even during the show, at 254-282-0495. That's 254-282-0495. And you can also send us an email at radio@spendlifewell.com. We'll respond to those questions on the show, or we'll get back with you within 24 hours. And we may even choose your question to be part of our listener questions that we answer every show program.
Yeah, we would love to hear from you.
Yep, 254-282-0495. You can also text us at that number, so that's easier. And you can't call while you're driving, but you can text while you're driving. No, don't do that. but you can send us a text, and we will respond to you in just a few minutes. So, I do want to put a challenge out to our listeners today, because this is real important. Because on the Spend Life Well show, we're kind of low budget. We don't have a lot of pyrotechnics and a lot of music playing in the background and things like that all the time, or sound effects. But we want to know if you're listening to us and what you think of the show. So if you think we should continue to offer this financial wellness a program based on biblical wisdom, let us know. Let us know that you're listening. Let us know that you'd like us to continue to do these things and talk about different financial topics from the perspective of the Bible. So, Jesse, I think there's some stuff that our listeners need to know about. Why don't you update them on a very important program we have coming up later this morning?
Will do. But yeah, as Mark was saying, shoot us a text, 254-282-0495. But right after the program today at 9:15, we'll be hosting a live webinar. It's our market update webinar that we do at the first of every month. That's going to be a deep dive into what's happening in the markets right now. So a very interesting time that we're going through right now. We're seeing a lot of movement. And for some reason, the markets are behaving in a way that we did not expect, this time for the upside. But we're going to take a deep dive into that. We would love for you to join us. This is going to be an interactive webinar where participants can ask questions about the economy, what's going on in your portfolio, a particular stock or mutual fund maybe that maybe it's in your 401k. You don't know what it is. Ask us. We'd love to talk about it. You can register for that at spendlifewell.com/events. Spendlifewell.com/events.
Easy to remember. Spendlifewell.com.
Yeah, SpendLifeWell. You'll find the link. You'll find the link right there. And if you can't make it after the show, we would love for you to still register, because we'll send you a recording. If you just register, then we know that you're interested and you can watch it whenever you want.
That's great, folks. A lot of people do that. They're out running errands, so they just go to the website real quick and register for the event. And next week, we'll send you a recording of that so you can kind of hear what we have to say and kind of our take on current events and your portfolio. So today we're going to recap the news a little bit since we last spoke. There's been a few things that have been happening since then.
Yes.
And then we'll also talk about 4 things that baby boomers, now Jesse's going to laugh because for some reason we've learned that baby boomer is a derogatory term for those folks of that generation. I didn't realize that. That is the name of the generation.
We mean no offense by it. I don't think anybody's actually offended by it, but occasionally the word boomer by itself has a negative connotation.
Well, we're talking about baby boomers, the generation that were born from 1945 to 1964. That's the generation after the greatest generation that resulted from after the World War II. Yep. We love baby boomers because they are a majority of our clients, and we like to get to know them better. So we're going to talk about 4 things baby boomers need to know to retire. You know, I guess boomer would be an offensive term if you're a Texas fan, right? Because you don't like Boomer Sooner.
Well, yeah, more than just Texas too, but yeah, you're right.
But we're talking about baby boomers. Okay. And then, as always, we'll take a few questions from some of our loyal listeners. We love to hear from you. The easiest way to let us know that you're listening and you want us to continue this program is to send us a message at radio@spendlifewell.com or send us a text at 254-282-0495. So, Jesse, one of the first things that we wanted to talk about was the inflation. I think we touched on it briefly in the last show. So why don't you give us an update on what that annualized inflation rate was?
Sure. So as you may have heard, the U.S. inflation rate is 9.1%. And all that means is that the Consumer Price Index, which is a basket of common goods and services from the Bureau of Labor and Statistics, that basket was 9.1% higher than the same time last year. So that's how they measure it. And it's just one of our economic indicators that really the average American can feel on a day-to-day level.
Well, and the thing that was surprising about the 9.1 number, besides the fact that that's really hot.
Yeah.
I was thinking, Jesse, we went to go see Top Gun Maverick, and that was one of the songs they played in the movie. It was Great Balls of Fire. And this is like Great Balls of Fire when we see the inflation rate tick up higher than expected. But what some people may not realize is that inflation on a month-over-month basis is actually speeding up. It's accelerating. I think in June, what was that, Jesse? The month-over-month for the month of June?
Looks like 1.3.
1.3%. Now, that doesn't sound very dire, but when you annualize that, if you look at that on an annualized basis, that's over 17% annualized.
Yeah.
Now, Jesse, I don't think you think this, but I don't think this either. I think inflation will begin to slow down. The rate of increase will slow down. We may even have some negative decline in the annualized rate because we're getting to a period where we started seeing inflation rates really start to spike up. That means on an annualized basis, we're going to see that level off or even fall a little bit.
Yeah.
But the fact that inflation is still rising is a concern. We feel that in our pocketbooks and everything else.
Yeah. If you're a graph-oriented person, we have some awesome graphs, and we're going to share them on our webinar after this. So just go to spendlifewell.com and join us right after the show because we've got some really interesting data to share.
Yeah, and one of those, the other data points that we were talking about really was just the gross domestic product. And we saw the data come out, and we were expecting to be a little bit in the positive. But really, when you look at it, it was it negative 0.9%. And so that is concerning. The technical definition is 2 quarters of decline. It means a recession. And we have had that, but instantly, even the week before, the data came out last week, we had the White House telling us that, what is a recession? It kind of reminded me, I was living in Washington, D.C. at the time of the Monica and Bill scandals going on up there. And I was watching some of the hearings. We got to see some of that, not live, but we got to be involved in some of that. And it kind of reminds me of that whole quote when Judge Starr was interviewing President Clinton at the time. And President Clinton was wanting to really debate what the meaning of the word is. and you heard that right. What is. So I think we're getting that a little bit from the White House. We're trying to spin the data as best we can. The National Bureau of Economic Research is a non-governmental entity who is supported by the government, who produces whether or not it's a recession or not. And so a lot of economists, and especially the White House, is telling us that, well, this is not really a recession because we're seeing employment rates stay strong and things of that nature. Jesse, do you have any thoughts on that?
Well, it's everybody's least favorite word over the past 2.5 years is unprecedented, but that's what they keep saying. This has never happened before. And it's a very different looking economic outlook where it meets the technical definition, but we're not quite there, they don't think. And I think it's funny that I saw online the other day that somebody, mystery person, went in and locked down the definition on Wikipedia of what a recession is. So they changed it and then they locked it so you couldn't change it anymore.
Oh, so what does it say? It's like, yeah, it's not really 2 quarters of negative GDP decline.
It says it involves a lot more calculations. I don't know what the exact definition is.
Well, and I think what the White House was telling us is like, you American people are not smart enough to understand all this stuff, so you just believe what we say. And there's some other things, Jesse, that have been coming out of the White House in the last week, and that's who is causing and what's causing the decline in oil prices and thus the decline in gasoline prices.
Yes.
Who's taking credit for that?
Our elected officials love to take credit for this, especially at the presidential level.
But so if the president is taking credit for working hard to lower gas prices, but it's not his fault if the gas prices go up, I don't quite understand that. But Yardeni Research has done a study. In fact, they do it every month. They look and track at oil and gasoline consumption. And this is a basic supply and demand equation here.
Right. Back to Econ 101 from school.
Econ 101, which, we understand that at least some intern in the White House has not taken Econ 101 because that person tweeted a few weeks ago on Twitter that the gas prices would come down if only gas station owners would lower their prices. And if anybody knows a gas station owner, you know that they don't set the prices. That is controlled by the middleman there, and they are making literally fractions or just a penny or so on per gallon of gas. And it just exemplified how out of touch this administration is with how this works. But that's what they want you to believe because, once again, American public, you are not smart enough to understand all this stuff. So just trust us. But the reason, according to Yardeni Research, the reason that the price of gas has come down is because we're buying less of it. It's simple supply and demand. If the demand drops, the price will fall. And we have been consuming fewer and fewer gallons of gasoline this summer than we have in the past. And so the price has been falling.
Yeah, I think there's a lot of social pressure, and you might have experienced this listening to this show, but a lot of social pressure to carpool or to not take that trip, to not cross town and go visit your friend. I've seen that a lot. People are saying, "Hey, can I get a ride? Can we ride together? Can we, can you Venmo me $5 for gas?" People are conscious.
And it's serious. Have you changed your plans this summer because of the price of gasoline? Give us a call, 254-282 0495. You can also text us. Just say, yeah, cutting back. This stuff is expensive.
Mm-hmm.
And, we're seeing a lot of that. And that is the reason that the price of gasoline is falling. It has nothing to do, sorry for our liberal-leaning listeners in the Central Texas area, has nothing to do with what the White House or our government is doing. They can have very little minimum impact on prices of these things. And what they're doing is having a negligible impact. So, Jesse, we might be in a recession, but we might not know for some time because of this National Bureau of Economic Research's definition. It's not cut and dried. It leaves room for interpretation. But that group loosely defines a recession as a significant decline in economic activity that has spread across the economy and lasts more than a few months. Not 2 quarters, a few months. So even if you're looking at these things, it seems like we're in a recession. But the things that the National Bureau of Economic Research is looking at is really gone down to the depth of the recession, how wide is it diffuse across the entire economy, and how long is it lasting?
Doesn't it have to do a lot with employment numbers as well? You were talking to me about that last week.
Yeah, so we're still seeing a strong labor market, even though the unemployment claims ticked up this week. That's a sign that things could be cooling off, and we're starting to see some corporations announce that they're laying off people. Who was that announced yesterday? Was it Apple or was it Amazon? I can't remember.
I can't remember which one it was, but they're most of them are slowing, and a couple of them are actually laying off.
Yeah. Hey, so folks, we'll continue this conversation on the other side of the break. You're listening to the Spend Life Well Show. Well, welcome back, everyone. I'm Certified Kingdom Advisor Mark Trice. I'm joined by my fellow financial professional, Jesse Hamilton. And we've been talking about inflation and whether or not we're in a recession. There's a lot of complexity that goes into determining whether we're in a recession, but does it really matter? Are you feeling the effects of a slowdown in the economy in your pocketbook? You're certainly seeing the effects of inflation. And I think it's safe to say that we really are in a period of what we call stagflation. Now, stagflation, for those of you that don't remember, or you're not an econ major like myself, stagflation is a period of high inflation and low or negative economic growth. And this is important to understand this because we are in a period of slow economic growth. We may be in a recession. We may not. They won't tell us till later on, probably after the November elections. That's my guess. So, is that impacting? When you have high inflation, one thing, Jesse, we were talking about employment, but we didn't mention wage growth. Wage growth is still going up a little bit, but not
nearly as fast as it needs to be.
Right.
I mean,
so
imagine a country where everybody gets a 9.1% raise just because of the price of inflation. That's not going to happen.
That's right. So we understand that consumer spending is slowing down. We understand that wages are not rising as much as inflation. And that's creating a problem on people's pocketbooks. I mean, my wife and myself have had to make some choices to cut back in different areas or realize that we're going to have to sacrifice somewhere in the future. So, Okay, so enough about that. But I want to start a new segment here, a new game show we're going to start playing. We'll try to do this every once in a while. I want to have some fun.
Yeah, this is going to be fun.
So if we're actually high-priced, high-cost, high-production video. And so I'll have to do the fix the video here in a second, Jesse. But if we were that type of show, we'd have a lot of theme music for the game show here.
Yeah.
And this segment we're calling "Should I Do That?" Making sense of expert financial advice. Now, this article comes from Bloomberg. So we thought we'd have a little fun here. And we're going to evaluate the quality of the advice. There's all these articles out here, right, Jesse? That's like what you should do with $1,000, or
in fact, you can go to Bloomberg right now and you can toggle it between 3 articles: what to do with $10,000, what to do with $100,000, what to do with $1 million. And if you're taking advice on what to do with $1 million from a Bloomberg article, maybe you should talk to a professional. But moving forward,
we should tell people that we have kind of a rule, not a rule. It's kind of a tongue-in-cheek rule. If it's on the cover of a magazine, don't do it.
don't do it.
Don't fall for it. We used to collect when I was a young advisor. I used to look at magazine covers, and usually they were, it was Money Magazine, or if it was some other magazine that was basically promoting the next hot stock. And without exception, oftentimes we could look at that stock 6 months later and see how much it had gone down.
Well, it's an oxymoron right in itself, because the whole point of a hot stock is nobody knows about it.
That's right. So when you tell everybody about it, it's no longer a hot stock. All right, so here we go. This is an article from Bloomberg.
It's called,
what was the title?
It's called Ask 6 Wealth Advisors Where to Invest $100,000 Right Now.
Okay, so these are experts, and I have my air quotes going here. These are experts in financial advice. We're going to critique the advice. Here we go.
Okay. Our first individual says, dollar cost average into large caps, focus on value, and look at high dividend, low volatility ETFs.
Okay. Well, that could be advice, but what does this expert know about our listeners?
Nothing.
Absolutely nothing. Right. So it could be that they're trying to push certain types of mutual funds. It doesn't say if they're a mutual fund advisor or an ETF advisor, but dollar cost averaging is not in itself a bad idea, right?
Not at all, no.
Why don't you explain dollar cost averaging real quick?
That's just where you buy in to a security over time, and your price is going to vary, whether it's up or down, but over time, your dollar cost is going to be an average somewhere in the middle, and it's probably going to benefit you in the long run. But it's a very long-term strategy, for people investing once a month, more money, that type of thing.
Okay. So sometimes you're buying high, sometimes you're buying low, but over time you actually get a better price.
Right.
Okay. So dollar cost averaging itself is not a bad thing.
No, and neither is value, and neither is high dividend, low volatility ETF. That's a very specific niche within the world of ETFs, but that doesn't necessarily mean that you should do that or avoid it. Like what Mark was saying, this is somebody who might be an expert, but they don't know about you. So,
and if you notice, folks, the theme that we're going to be covering here today is you need to get personalized advice, personalized advice about your specific financial situation,
right?
Because no one knows you better than you. So dollar cost averaging, not a bad thing to do. And we recommend that for a lot of people that are trying to decide, should I stay in? Should I get out of the market? And we encourage those folks that are, in their 401k and things like that, just stay with the plan, keep doing what they're doing, and dollar cost averaging is a way to do that.
Sure. So let's move on to our second expert. You will find in this article if you look it up, but my little summary of that here says, this person says, to use an interval fund, look at private equity, place importance on diversification. And this person says, a reasonable alternative to private equity would be a microcap ETF, which is about as narrow as it gets.
Yeah. Once again, this advisor knows our listeners how. You don't. Now, that may be great advice for a very specific person, but most of us are not going to have access to private equity. Now, interval funds are a different type of mutual fund, and they have special rules and regulations on them, and they're not suitable for everyone. So,
special is a very positive word. I would say they have strict rules.
Yeah, they have. That's right. They have strict rules. And so, once again, this expert advisor is giving advice on something that probably is only really available to the super wealthy.
Hmm.
All right, what's next?
So our third expert in the financial world from Wall Street says, follow a disciplined rebalancing strategy with growth ETFs.
So this brings up an interesting concept because the whole concept when you're dealing with most of the financial industry, which follows modern portfolio theory for management of your investments, and that is we're going to systematically rebalance our portfolio. And this
Hmm.
is how it works. When something is doing really well, we're going to sell part of that portfolio and buy some stuff that's not doing well. Makes perfect sense. I want to sell the stuff that's doing well and outperforming and buy stuff that's underperforming. Well, right now, almost every asset class is underperforming in the markets, except for
Hmm.
maybe utilities or energy right now. Okay. And energy's really taken a hit in the last 45 days.
Right.
So basically we're following that modern portfolio theory, or this expert is following that modern portfolio theory just to rebalance because it'll all work out.
Is
Once
that
again,
a really fancy way to say buy the dip?
well, it kind of is, but we don't prescribe to that.
No.
So once again, I think this is a flawed piece of advice given by our quote, and I've got my air quotes up now, expert
Hmm.
advice. So anyway, all right, let's go on to the
All
next
right.
one because
So
these are
our
fun and we kind of get the theme here
yeah,
going here. Go ahead.
it's interesting to talk about it too. So our fourth expert says, focus on military and defense spending, energy and cybersecurity. With geopolitical tensions being so high, these sectors will create a need and create value for you.
You know, sometimes Jesse, I just wonder. I wonder if these expert advisors don't have a clue as to what's going on with the economy
They
in the
just see
market.
headlines about Russia.
Maybe so. You know, and it's really amazing. You really, folks, you really want to be working with an advisor, and this is not to plug us or anything. This is just important that you work with a Christian financial advisor that shares your values. And this
Hmm.
is probably a good time to promote Kingdom Advisors. There are a number of Kingdom Advisor certified advisors around Central Texas, and you just have to go to kingdomadvisors.com to look for one that's near you. But you want to make sure that your advisor is not guessing. And this is really, there's a little bit of guessing going on here with each of these uh, bits of expert advice. Are we going to be increasing military and defense spending? I don't know. It seems like right now the things that are on Capitol Hill is the Inflation Reduction Act, which we'll talk about in the next segment. That's
Hmm.
funny. It doesn't mean IRAs, and it doesn't mean that they're going to reduce inflation. So, you know, that's why these experts, they're just trying to get attention. And quite frankly, Jesse, one of the things that we get approached on a really a monthly basis, somebody that's a quote journalist or a writer is approaching us to ask us to see if we want to be in Bloomberg or if we want to be in the Wall Street Journal. And of course, we have to pay for that privilege.
Mm.
And this is where these folks are getting these expert opinions from these expert advisors. Now, for those of you that are listening on the radio, you don't know that I'm putting my air quotes up here when I say expert. The point is they don't know you personally. You don't know whether or not that really applies to you. And
Mhm.
so this is kind of the dilemma here when we read these articles. We just kind of laugh at them and say, "Oh, that's interesting."
Well, imagine a doctor that prescribes the same medicine to every patient.
Yeah, and it's kind of the old adage if the only tool that I have is a hammer, everything looks like a nail,
Mm.
right?
Right?
And so a lot of times, if you're working with the typical, well, I don't want to say typical. If you're working with a financial advisor that sees everything as a nail because all they have is a hammer, you're going to get the same thing. And so, you know, we have to be careful about these things. What's the last one there, Jesse? Because I think this is one that I think is
Well,
kind of funny.
we've actually got two more, but we'll
Okay.
cover this one really quick. This expert says that defense sectors are at peak valuation, so look for growth elsewhere. and use a 1 to 3 year judgment to determine your exposure to large cap and small cap.
Okay. Well, our average listener really knows what they're talking about there. So, folks, I think the gist of this segment and our little game show here, should I do that? Making sense of expert financial advice. And of course, expert is in our air quotes here. You need to make sure that you are getting specific individual advice that applies to your unique situation. And the only way to do that is to really enlist the services of a trusted financial advisor. We kind of lean towards wanting to work with our certified Kingdom advisors. You can find one in your area at kingdomadvisors.com. Hey, Jesse, let's give the folks a quick market update in the last week or so. Let's just get those year-to-date numbers based on when we got the show going here.
So this will just be a basic look at the indexes, but so we follow a small cap index of the Russell 2000. And as of this week, that index is down 16.5% year to date. We also follow the long-term treasury, so 20-year treasury. That is down 21% year to date, which is pretty extraordinary. We'll move on to the S&P 500, which is the 500 largest companies in America. It's a lot of people's favorite index for, like dollar cost averaging, like we said before, but that index is down 15% year to date. And then lastly, the NASDAQ, which is the tech heavy sector, which is pretty volatile, and it's down 21.4% year to date.
And quite honestly, these indexes have risen quite a bit in the last 2 weeks.
They have.
And a lot of the pundits don't know why.
People seem to be behaving in a way that is not rational. But what's new?
Well, I was watching some of the financial news this morning, just trying to get updates because we were expecting the unemployment claim numbers and stuff. And once again, just like they were last week when Chairman Powell was talking about raising interest rates another 0.75%, they're all scratching their head saying, we have no idea why the market's going up. And we see a lot of this within bear markets. We've seen this. We've seen 4 or 5 or even 6 times in a traditional bear market where you will have a bear market rally, and it can be quite significant.
Yeah,
that rally can. I mean, we saw some in 2007 where the markets rebounded 20%, and I think in this recent one here, the Nasdaq's up 25% off of its bottom, but it's still down 20% or so or more for the year. Big rally, but will that trend continue? The S&P 500 is very near some resistance that we're watching very closely. If it breaks through that and continues on up, we might have a true rally here, but we'll have to wait and see. Folks, when we come back, Jesse's going to dig in and read some questions from our listeners. If you've got a question, you can give us a call at 254-282-0495, 254-282-0495. You can also text your questions to us as well. We're going to take a quick break, but when we come back, we will get into those questions and continue our conversation about inflation. You're listening to the Spend Life Well Show. We'll be right back. All right, welcome back, everyone. I'm Certified Kingdom Advisor Mark Trice. You're listening to the Spend Life Well Show, where we apply biblical wisdom to your financial journey. As always, I'm joined this week in the studio by fellow financial professional Jesse Hamilton.
Hey, everybody. Thanks for listening.
Jesse, we've had some questions from listeners this last week. Let's jump right into those.
Yes, I hope they are listening, and if they're not, you all will hopefully get some information out of it. But our first listener question is from Tony in Cedar Park. He asked, do you have any tips for getting the best interest rate on a new mortgage? And I thought this was very relevant for the state we're in with the real estate market. Lots of people looking to buy and sell when prices are high. So what are your thoughts, Mark?
Yeah, and so we're seeing a little bit of the real estate stuff slowing down a little bit. Sales are still happening at a pretty good pace, but not as fast as they once were. And we've also seen the interest rates starting to tick up as well. I didn't have a chance, Jesse, to look at the average 30-year fixed mortgage. Maybe you can Google that while we're talking here.
Sure.
But this week we are seeing yields drop a little bit on the 10-year Treasury, and that's typically historically what mortgage brokers and things were using as a peg for setting interest rates. Now, the 10-year Treasury yield is not what your interest rate will be. It'll be that yield plus some percentage above that. But you can kind of peg that and look at that. And I think the 10-year Treasury has been dropping this week. So if you're really close, you've identified a property, you might want to start to talk to your lender about locking in your rate after you've done that initial loan app. And some lenders will lock in for a very long extended period of time, even up to 6 months, I think, sometimes.
Yeah.
We know we have some sponsors on this radio station that are realtors. I'd love for them to text us at 254-282-0495. Let us know what you're seeing there with that. But were you able to find an average 30-year fixed?
Yeah, this week's 30-year fixed average is 5.54.
5.54. So that has come down a little bit. I think it was like 5.78.
Yeah.
That's for someone with really good credit.
Yeah, that is.
And I think some other tips you can look at when it comes to getting a good rate. Obviously, you want to make sure that your credit is nice and clean. It's okay to have debt, but we don't want to see too much of that debt, and we certainly don't want you to have those cards maxed out. So make sure you get your financial picture all cleaned up before you try to apply for a loan. And it always helps in this environment, I think it's worth it to lock in that rate if you can after you found that property to do that, because rates are varying, and we have seen swings of quite a bit almost every week now. So that's still a little volatility there.
Okay. All right, we'll move on to our next listener question. This is from Debbie, and she said she's from Salado. Debbie, if you're listening, she asked, I enjoy picking stocks in a small brokerage account based on what's happening in the US and around the world. I'm a beginner, but I was wondering what portion of my savings would be an appropriate amount to do this with.
So sometimes, Jesse, when we do live seminars, which we haven't done a ton since COVID came around, but oftentimes I would ask a group of, typically it was ladies, I would ask them if their husband had an investment hobby. And I don't think Debbie is talking about a hobby. I think she's trying to build her wealth. So as long as you're keeping this as a small percentage of your total portfolio, I think it's fine. I think you're learning about stocks and investments, and you learn from buying something. But I would say that, as long as you're maxing out your 401k and doing those things, I don't think that it's inappropriate for you to do a fair amount, maybe 10% of your 10% of your net worth there or income could go to something like that. As long as you've got a good emergency fund, you've been maxing out the 401k at work, and you can do those things, I think that's great. But we always stress around here at the Spend Life Wealth Show, let's get those debts knocked out. If you got those things knocked out, then certainly just picking stocks, that's fine. But it's always good to consult a professional that can kind of help you avoid things, because a lot of times what we've seen is that people will have a bias. They'll have a bias for what the hot stock, right?
Mm-hmm.
And usually you don't want to buy something at its peak. And there was I will not tell you the name of this company, but when I worked for a Big Four accounting firm, we had a client who made and sold donuts. All right, made and sold donuts. I'm not going to tell you who it is, but they're really good donuts. Of course, I think all donuts are good. But they made the cover. They made the cover of one of those financial magazines, and within 6 months, that stock had gone down over 50%. There were a number of different issues behind that, but we see that time and time again. Try to avoid the hot stocks. Debbie, I would advise you to think about things that you understand. I had we had a client one time that this could be anybody. If you're working with someone and you work for, let's say, a shipping company, you understand the shipping business, right? So invest in the things that you understand. If you are a realtor or a real estate person, invest in things that you understand. When you're doing it like this, where you're trying to pick stocks in there, try to invest in the things in the industries that you understand. Don't do investing to get rich. Okay. Can't tell you the number of times we have people call us up because they want to invest in some hot stock or an oil well or something like that. And you can tell just from talking to them, they're just trying to make a quick buck. That's not investing. That's called gambling. And we don't gamble at our firm, and we don't gamble here on the Spend Life Well show. You notice we're recording this week because neither Jesse nor I won the Mega Millions Powerball, whatever it was. I didn't play. You can't win if you don't play, and I chose not to play. We don't like to gamble. So, Debbie, just make sure that you're investing for the right reasons, that you're trying to build your wealth, you're trying to grow it over the long term, and you're not trying to get rich quick. And I think that it's fine for you to do a small portion of your overall income into investing in that. And if it gets too big, maybe you want to shift it around later on. But a great question, Debbie. Just make sure we are doing it for the right reasons, that we're doing this to be a good steward and to diversify our portfolio a little bit. Great question.
All right, well, we'll cover one more, and we are not a political show here. We try to not get involved with that stuff, but we'll bring this one up. Richard from Oak Hill said, I've seen on the news lately, people are talking about politicians making stock trades based on insider information. Do you think this actually happens among our leaders?
Sadly, yes, it does happen. And despite, I'm thinking the most recent little thing here, some lady, she's like the Speaker of the House or something like that. I won't throw any names out, but her first name starts with N, the last name starts with P, and she's kind of important. So her hubby invests in a lot, and they have millions of dollars in their stock portfolio. His stock portfolio, because the Speaker says that she doesn't buy stocks and bonds. But if you're sharing the same bed and have your pillow next to this other person's pillow, would you talk about things that went on at work that day? Maybe so. Folks, there is a lot of insider information floating around Washington, D.C. And is there stuff like that going on? I would suspect it's a high probability that goes on. Should it be illegal? Absolutely. Us as myself as a financial advisor, if I trade or buy or sell a stock based on some inside information, like a bill passing that's going to pump billions of dollars into a particular sector of the economy, that's illegal. But it's okay for a politician? I don't think so. And I hope that they'll put in some reforms in Washington to prevent that, so that politicians can't trade on insider information. It certainly is illegal in the investment world. We know Martha Stewart got in trouble for that with some company that she did. She actually went to prison, didn't she? Is that right? Yeah,
I think so.
So I think it goes on. Yeah. Can I prove it? No. But there's a lot of information floating around Washington, D.C., and could that be used to get a leg up on a particular trade? Yeah, unfortunately, I think so. But we're not doing a lot of enforcing in Washington, D.C. So sadly, Richard, the answer is probably yes. But you trade and you manage your portfolio for the long haul. Don't be worrying about what's going on in Washington, because they're not able to buy and sell that much to influence the markets. Okay? Great question, Jesse. In the time we have remaining today, I wanted to talk about the 4 things that boomers need to do. Baby boomers need to do to retire. So here's some 4 things that we should consider. Well, let's just go through this list, Jesse.
Sure.
I think, go ahead. What do you think is one of the big ones?
Well, the first one here is take responsibility for your money. So you might have been fiscally responsible for your whole life, but maybe you don't know exactly what's going on. Where are your savings? Where is your income going to come from when you make this change? This is a huge life change. And our goal when we work with clients is to be able to maintain a lifestyle.
Right.
Right?
And yeah, we don't want to go from working and having a good income to cat food and not going out at all, right?
Mm-hmm.
So I think a lot of people really are, especially during the down market. Yeah, see, I think I see that a lot. Is
Yeah.
they don't take responsibility for what's in their retirement accounts,
Yeah.
and they don't want to look. They just don't want to look. And so rather than make changes to protect their money or to make adjustments and so forth to take advantage of a down market, they're just ignoring it.
Mm-hmm.
And that's not good. We need to be on top of our money. The Bible tells us that we need to be good stewards. In order for us to be good stewards, we have to know what's going on. So take
Right.
charge. No matter your age, your position in life, what your investments need, they need to be managed.
Yeah.
Not
If
necessarily
you
by a stockbroker or anything, but ultimately you probably want to seek the advice of a financial advisor. But
Right. If you have been scared to look at your statements because of this market, I encourage you to go take some time today and just look at it. Just know what's going on.
yeah,
You don't have
I
to be
think
scared of it.
that's critical, right? All right. So also, one of the big things, one of the four things we're talking about is make sure you understand the risk of investing.
Mm-hmm.
Folks, you don't want to double down on black number 13, if that's even a color for black 13, maybe red 13 for all I know, on the roulette wheel. But you don't want to double down as you get closer to retirement and take unnecessary risk.
Right.
So we really can't be expected to reduce our spending income in retirement by half if we have to take risk. No, we don't want to do that.
Mm-hmm.
When you do that, when you take unnecessary risks, the result is that you got a portfolio that's susceptible to dramatic upward and downward swings. And we've seen a lot of that this year.
Mm-hmm. We have.
With the first 6 months of the year starting off at their worst point since 1970.
I think part of part of understanding the risk of investing is really understand what's going on with your 401k. Many of you looking to retire have probably been contributing to a 401k for years and years and years. And you need to understand that probably nobody's looking after that but you. A lot of people believe the lie that, oh, somebody's watching it for me to make sure it's safe. That's not true, right?
Yeah, no one's watching it except you. And if you're not watching it, nobody's watching it. Okay. Next thing, Jesse, is you really need to be communicating with your spouse or significant other.
Mm-hmm.
You need to be talking about things. You need to make sure that you're on the same page for how retirement's going to look. There's nothing more unpleasant to discover that your vision of the perfect retirement was to sit around in your boxer shorts on the front porch and watch the cars go by, and your spouse decided that she wants to travel.
Mm.
So you've got to communicate. It's also important that spouses are talking about everything in their financial situation. Folks, if you are maybe keeping something from your spouse, maybe a credit card bill or something like that, getting closer to retirement is not the time to hide that, because that can really blow up your retirement. So make sure
Yeah.
you're talking about things. What's retirement going to look like? Is there anything that the other person needs to know? We need to share and be open and honest in the communication. Jesse, what's the last one here that we're talking about?
The last one here is plan on the inevitable. And the phrase that goes with it is, yes, we're all going to die. Not the day that you retire, hopefully many, many years, decades after you retire. But we need to grasp that it's going to happen.
So that's life insurance. We need to talk about, you may not need it, but you may need it. You may need long-term care insurance, and you may not. The only way to really evaluate this is talk to a trusted financial advisor to help you go through these things. So just 4 things there, Jesse, that are important for baby boomers to consider as they get closer to retirement. So, I think those are all things we can talk about on an upcoming show.
Yes.
We're getting close to the end of the last segment. Man, an hour goes fast, Jesse, when you're having fun. There is a lot of uncertainty out there, folks, but we always have to remember that God already knows what's going to happen. He's got a plan for you, and he's going to bless you in so many different ways. And we hope that your week is blessed and enjoyable. And God willing, we will join you next week here on the Spend Life Well Show. Jesse and myself will come back and talk about the hot topics of the week. Thanks for listening. You've been listening to the Spend Life Well Show.